Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, April 17th, 5:12 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend, currently excluding regional banks and real estate from anything that we're looking at due to the fallout from the bank liquidity crisis of a month ago, but we're seeing some good action in regional banks today. In fact, if today's low holds, this may be a day that we point to as this crisis went into the rear view mirror. Also had good action from XLRE. We're going to take a look at some charts and I'll show you what I'm seeing there. So check over here at the trend gauge. We are, what is that? Okay. Check over here at the trend gauge, market leadership, neutral. Stocks holding up fine, not making much progress. We want to see leaders take this market bull by the horns and drag the indexes higher. What it really seems like is happening is the indexes are dragging some of these uh, leadership quality names, and the fundamentals are there and the setups are there, but we need to see some strength. We'll also talk about one today that showed the kind of strength that we're looking for. So that's leadership. Then, of course, we look at all five of the major indexes across 3 time frames to determine the health of the overall market. Short term, we're above the 21-day moving average. I think the small caps got above it today. We're going to take a look at that. Medium term, mixed bag versus the 50-day moving average, and small caps are lagging below the long-term 200-day moving average. But this and Friday's action uh, were a bullish follow up to Thursday's action, where we had a strong trend up day. We had a kind of a weak early day on Friday, but it was resolved to the upside. And then today, things were tight. They tried to break below the opening range, but the lows held and the tight range resolved into buying into the close, and we closed at the high of the day. So that's what happened today. A tight day ends with a trend up, high of the day close. This is how bull markets close. They're notorious for being weak early and being strong into the close. And 3 days in a row of that, that's good stuff. So here are the final numbers. The Revere Growth 7, this is our 7 growth ETF composite proxy, up almost 1% on the day. And this, all the stochastics turned up on this today. And this given us some reason for optimism. S&P 500 opened down 0.05, broke the opening range, but the lower range held, and tight day with a trend up into the close, up 1/3%. Good stuff. NASDAQ lagged, but still same thing, up 1/10%. Dow up 0.3, mid caps up 0.8. Russell 2000 led by small cap banks, up 1.22% on the day. Global diversified 60/40 down 0.05%, dragged down by, once again, for the third day in a row, bonds. And in-house GROTECTION, we were up just slightly. Couple of our positions lagged on the day, but I like the way some of them closed. I like the way some of them are setting up, and I like a position that we took in a sector that has been resting, but looks like it might be ready to reassert itself again. We'll take a look at that when we get to the tail of the tape and break down the charts. But first, let's go to the major indexes. Why do we do what we do here at Revere? Because we want to avoid this sequence of returns risk. If you're approaching retirement, you can't afford to get hit with this harsh scenario of having serious drawdowns to your nest egg that you worked your entire life for. It doesn't matter that you outperform the market. You were up 8, 9, 10, 11% on average over the last 15 years. If it gets cut in half over the course of a couple of years, 35% down during COVID. Did you get out of the way of that? We did. 27.5% during last year's bear market. Did you get out of the way of that? We did. Now we're off to a slow start this year, but that's because the indexes have been leading, not leading stocks leading. And If the market wants to make a strong charge higher, these leaders are going to have to get involved. So the gains that the progress that we've been making has all been tied to index ETFs. Um, Typical action of leading stocks is a breakout, a failed breakout, pull back to a moving average, bounce off the moving average, and buying weakness and selling strength has been the way to go. We want to see strong breakouts. And if you're interested in this approach, give us a shout. You can email me, don@revereasset.com, or my partner, Dan Stewart, dan@revereasset.com, or phone us at 855 Real Wealth. That's 855 732 5932. So this is a good looking chart here of the S&P 500, a cup, a little bit of a handle, and breaking out of that resistance area that started last Thursday. Okay. With a strong close, we had early strength Friday that just completely broke down. So we broke above this 4134-ish area on Friday. Actually closed above it on Thursday, higher on Friday, broke back inside it, closed right near it on Friday. A little bit of early action, okay, tight. We broke down tight again, but rally into the close back above this key 4134 area, closing up at 4150. Let's pull this back a little bit. 60-minute chart. Uh, High close here on the 60-minute chart, 4163. We're right below that. We want to bust out of here with some gusto. We want to see the Nasdaq 100 lead the way higher. We need to see semiconductors come back, FANG stocks doing well, and growth stocks. Let's take a look at IWO. This one is probably all in all the best proxy for the overall uh, small and mid cap market. Ran into the declining 50-day moving average. If we can bust above this, that would be a really good sign. All 7 of the G7, the RG7, are above their 21-day moving average. I'm going to look at ARC when we get to the tail of the tape. So next up, NASDAQ 100. Resting, you can see, over the last 2 weeks, after really leading the market into the middle of March, taking a break over the last month. See this failed breakout here, but the pullback just brought us back to the pivot, this 313.68 area. There's also a 315.59 key fib area. That's provided support as well as the 21-day moving average, closing at the top of the range today. Stochastic crossed back up late last week. Looked like it was going to hook down today, but the strong close did its job. Let's move on to the Dow Jones Industrial Average. Continues to just trudge higher. This has just been a nice move off the lows, reclaiming all of the moving averages right into this 34,000 area. Now mid and small. These are what lagged in this area back here. 2 really bad days, 3.9 and 3.10, and then had on 3.11. This is when the banking liquidity crisis was at its peak, but we found our footing, broke back above that range, back tested it last week and held. Now back above the 200, back above the 21, 5 days tight here on the mid cap index along the 8 and the 21-day moving average. We want to bust above the 50 in this recent 5-day tight range to provide some confidence. Growth bulls now, okay, back above the 21 on small caps. We've had one close above, one below, one above, back below, another one above. We get 2 closes above here. It'd be a change in character from the ping pong we're playing along the 21-day moving average. That would be a good sign. Nice crossover a week and a half ago for small caps on the stochastic, heading into overbought, but not quite there yet. Room to run, still below the 200, still below the 50. But let's take a look at this. Here's KRE, the regional bank index. It doesn't really look like it's much, but let's take a look at this 5-minute chart here, and you can see we initially gapped down and sold off hard the first 15 minutes, and then look at this reaction the rest of the day, getting up near the gap up in these small banks that we saw on Friday. So the bad reaction on Friday with the gap up on some of the Friday banking earnings was sold off hard Friday. Well, it was bought just as hard today, and we ended up about where we started with Friday's gap up. Let's go to a daily chart on this on the KRE, and you can see we're still under this declining 21-day moving average, but this could be, let's go to a 60-minute chart here. You can see where we tested these lows from earlier in the crisis. This was the pivotal gap down day. We tested it, we held, we tested it again, we held, we tested it again, we held. If we're lucky, we're putting in a bottom here, and the liquidity issue will be behind us. Let's take a look at a bank that was involved in this. A lot of questions about MTB, M&T Bank, during this liquidity issue, and you can see how far it sold off from 162 all the way down to 110. That looks like a pretty good reaction to the numbers that they put up on earnings here. You can see started low, started weak, made new lows, and then boom, people just buying this. These people aren't saying that M&T is in peril with this up on 150% average volume, up 7.8% back above the 21-day moving average. This is the kind of reaction that we want to see from some of these banks that have been having questions. And I know a lot of people have been having questions about Charles Schwab also. Let's go to the 5-minute chart on it. Gap down on earnings. That's it. Buyers came in. Boom. Uh, Big buying early in the morning. Nice little break, formed a base, buying into the close. Look at the volume. So on a daily chart, it looks like Schwab put in a low today also. Next test to overcome is the declining 21. Let's go to KBE, the bank index. We're right at the declining 21. We need to get above Friday's highs here and clear the 21. But again, at the highs of the day and showing relative strength relative to KRE. Big banks, there are several big banks in this index, and JP Morgan is leading the way. Second day, higher high after the gap, average volume up another percent into this 140 area is a lot of resistance. But if you go to a weekly chart, we clear above this 144.34 area. We've got clear air going back to the beginning of March. Uh, that is overhead supply, and it's once overhead supply is about a year old, it's not much of an issue anymore. So, I mean, you see where I've got my alert 144.34 in JP Morgan. That'd be a great sign for the banks. Strongest of the bank stocks so far. We've got Goldman and Bank of America, I believe, tomorrow morning. So let's see how those reactions are gauged. Also, take a look at the S&P 500 here. Friday is the 1-year anniversary of this pivotal April 21st date where we failed trying to get above the 200-day moving average. This was the last shot for the Bulls, and it failed, or the Bulls, yeah, and it failed, and the Bears took control there with this big move down from 4,500 to 3,800 in the course of about 5 weeks. The next bounce formed about a 2-week base and broke down below again to lower lows. Another bounce into the 200-day. Leg 3 down. We thought we were going to see a fourth leg down, but we haven't. But the critical damage that was done to the market started at this 4,500 area 361 days ago. Let's see if we can get back above this 41.95 high. There's also a key 41.55 fib that we failed at on Friday. Didn't quite get there today. So let's see what happens the rest of the week. Now we want to take a look at interasset correlation here. We'll start with the VIX to see what it did. Lower lows on the VIX. People can't believe it. They think it's broken. It's not broken. The ATR on the S&P 500 is coming down. It's down to 1.35. Most recently, it was up around 1.55. Was up over 2.5 during the bear market. It was as low as 1 during the climb higher in 2022. 2021. I don't think it's broken. Maybe it's being impacted by these zero date options, but where it is and the volatility of the market, I think, are in line. Let's go to the UUP, the dollar. Strong day today. Second, coming off the bottom. This is looking on the dollar like an island bottom that we broke below. We need to get above this declining 21-day moving average, and this is actually not a good sign for stocks. So we rallied into the face of a strong dollar today. That's good news for stocks. It means it's overcoming another headwind. Let's flip over to, if the dollar's weak, we got a segue, or dollar strong, we got a segue right to the precious metals. Gold, down again, but bounced off the 21-day and closed near the high of the day. Today's lows are key because we're also looking at this island top here potential on gold, just the opposite of the island bottom on the dollar, because they are inversely correlated. Let's go to GDX next, pulling back for a second day, down 2.25%. Not a lot, breaking the ADMA. This rallied for 4 weeks above the ADMA, minor change in character. It's perfectly normal for it to rest. In fact, to come back to this pivot around 33, 34. But this is looking like an island top also. But again, you're entitled to retrace half of a move, and or half of this recent move is quite a bit lower. So this is why we like to take some offensive profits. Let's go to silver. Also down 1.24%, closed mid-range, sitting on the 8 EMA. So the strong dollar the last 2 days has not been good for precious metals. Let's segue to bonds, which continue to show rates rising, prices dropping. Third day down for bonds, sitting on the 200-day moving average. And the weakest of the bonds by far has been the long-term TLT. Broke the 200-day moving average, broke the 50-day moving average today. It's at the bottom of the range. We're kind of running out of patience with our TMF position, which is TLT, but it is right at a big support area here, and very oversold on the stochastic. We're expecting a bounce here. Based on those two factors, doesn't mean it has to happen. All we do is weigh the evidence and see what the most likely course of events is. When something is supposed to hold at a support area and it doesn't, that tells you more about it. When it bounces where it's supposed to be, it tells you that it's still obeying the upper end and lower end of the ranges and overbought and oversold indicators. So that's TLT. So we know if prices are down, yields are going up. 10-year yield here, this looks like an abandoned, I think it's called an abandoned baby, or an island bottom also. On the rates here, just the opposite of the price, rallying strongly is the 10-year, also the 30-year TYX. Not quite, it didn't break down and to lower lows the way the 10-year did, but this has been a very strong 4-day rally in yields on the 30-year. And Bitcoin, which has been showing strength, pulled back today, down 3.1%. Let's look at it on a 60-minute chart. Right now, this is a failed breakout, basically 1, 2, 3, 4 days above there. We're back into the base now. Doesn't mean the move has failed. It just means the breakout has failed and you've come back into the base, plain and simple. We are oversold on a 60-minute chart here. So maybe temporary, or it may be a failed breakout. We don't know for sure, and we don't ever predict. We go by time-tested technical analysis to weigh the odds. Okay, so that's the inter-asset correlation. Let's go to the tail of the tape now. You can pause this to read everything. I'm going to hit the highlights. Empire State Manufacturing Index before the open, much stronger than expected. This was pointed to as the reason for the weakness early overnight. We showed some strength. But this is a first piece of economic data in a while that is showing economic strength as opposed to weakness and recession. That prior data points over the last 2 weeks had been showing. Day count, we went from up 1 with a consolidation to up 2 out of 3. With the move higher into the close. 16 days above the 80 EMA and the 21 EMA, 87% of a 25 basis point hike on the May 5th FOMC. Our expectations remain positive for the market. As long as we're above the 21, that's confirmed. We're inside trading ranges on the S&P and the NASDAQ 100 that we'd love to see break out of. To multi-hour tight bases resolved to the upside today. The ranges were tight early. The break to the upside to the close is bullish. Here are the bullish sectors. Here are the bearish sectors. Here's what we own in-house, the changes we made today. We added to Lulu. Lulu broke out early with volume above this little handle, but faded as the day went along. You can see in the 5-minute chart here, some volume came into it early. That volume was sold into around the 370 area. And for now, it's a one-day failed breakout. Uh, Needs to hold the ADMA on any pullback. So we've got a 4% position in Lulu now. We also added a Rambus. This is kind of on the thin side. Um, Around this ADMA low volume today, we added to it, like in the way this is set up. And the sector that's been resting, we got some good signs. Look how tight, look at how tight these closes in this range is for the last 2 weeks on semiconductors. Let's bring up a 60-minute chart here and you can see it very closely. Here's the undercut back into this 420 area that we broke out of. Okay, one day below, then we gap back above it. And then we've tested this 420 several times, 1, 2, 3, 4, 5 times now, and we moved up off of it into the close when strength came into the market. This also corresponds to the 50-day moving average on the SOX. Let's look at the other big index, the SMH, bounce at the 50-day moving average. Let's look at AMD, bounce at the 50-day moving average. Let's look at NVIDIA, bounce at the 21-day moving average. Let's look at Intel, bounce at the ADMA. It's been really showing some relative strength lately, uh, or it had been. It rested along with the index for the last 2 weeks. So this is the resting sector that I'm talking about. We bought SOXL today on the late strength, and we're looking for this to just bust above this declining tops trend, declining tops trend line. Lower lows, or sorry, lower highs, 420 on the bottom, kind of like a triangle. We're looking for strong move above this and participation. And since it corresponded with a couple things, one, uh, getting to oversold on the daily. On the 60-minute chart, we had a hook up on the stochastic that corresponded with the move up. Again, you can see on the 60-minute chart how this right below 420, this 418-ish to 420 area provided massive support on these and big components of it into support areas at the same time just leads to a low risk entry. That's what we did today. So added to Rambus and then bought Soxel, added to Lulu, taking our exposure to an adjusted beta of 1.26. Let's look at these stocks. In addition, there's some clues here for strength. Um, and here's the portfolio. This is what we own right now. Our largest position is NVIDIA. Second largest is Lulu. Then ONON. ONON and Lulu are the same, about 4%. NVIDIA is 5%. UPRO is about a little less than 8%. That's the equivalent of, I'm sorry, UPRO is 20%. That's the equivalent of 60% in the S&P 500. And then we've got some sectors and we like the setups of everything that we have. And if we see further strength in the market, we're expecting outperformance. So let's take a look at the rest of these charts. We showed KRE and KBE already. I want to look at ARK-K. This is another one that is putting in, look at this, temporary line pen. This triangle, we want to see this resolve. Which way is it going to resolve? This could be one of the clues as to whether the market is going to continue to have strength or weakness, because ARK-K is high PE or money losing but high sales growth tech stocks. It's resting very tight. You can also see this 37 area on the downside and right above $40.50 on the upside. Very tight action. Let's see if ARK-K can break out of here. That'll give us some more confidence to what's going on in the market. A couple other leaders that aren't in the 21 over 21 but showed some good action today. Mobileye also is forming this triangle also, and needs to resolve one way or the other. My guess is if ARK-K breaks out, growth stocks are going to be acting well, and Mobileye will continue to the upside as well. First Solar, the stock has shaken me out quite a few times, but solar, and namely First Solar, had a strong day today. Here's TAN. Enphase got an upgrade today. TAN back above the 200-day moving average. This is a growth sector that you want to see participating. Another stock that acted well today was Crocs, coming up to the top of this cup. You could argue that this 2-week consolidation here was a little bit of a handle, but not quite long enough from a true O'Neill definition. And the stock broke out today with volume and strength. IoT, it was an earnings gap. It rested, moved up to this 20 area, was resistance, broke above it strongly today. 48% would have liked to see more volume. 2150 was the high after earnings. It had 4 positive closes in a row with volume after earnings. Took a nice rest here. Let's look at it on a weekly. That looks pretty nice there. Again, I'd like to see a little bit of a more of a handle here, especially after this one day where it's up 7.3%, but it didn't give back much at all today. It was higher highs and higher lows early, formed a nice consolidation. If it breaks above this 21 and a half and the market is participating, this might be worth this might be one of those stocks that moves. It's got 48% earnings growth. They don't quite make money yet, but good earnings growth over the last 4 quarters. And that's going to wrap it. As always, like to hear from you. Email don@revereasset.com. Phone is 855 Real Wealth. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. And with that, I'll wrap up today, Monday, April 17th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.